And finally, we have come to talk about Google. Google. That's what I'm talking about. Reported earnings after hours, obviously, up right around 1%. Kind of boring. It did trade pretty choppy in after hours. There's no doubt about it. Definitely some choppiness. We're talking somewhat like slap chop, you're going to love my nuts. Somewhat like that. So looking at these earnings, honestly, what can I say besides a nice, huge beat? So quarter two GAAP EPS beats by $1.94. They posted a $10.13. Hey, that's a really good beat. That's a really good beat and really good profitability for this company. I can't lie to you. Where I find a little concern is with this revenue aspect. So revenue of $38.29 billion was actually down year over year, down 1.7% year over year. And you hate seeing a giant of the industry down year over year. They did still beat by around $1 billion, but you hate to see a titan of the industry down. This company obviously makes a lot of money from advertising, is a major portion of it. But you saw companies like Facebook rise in terms of advertising by around 10%. So I do want to look into this, obviously, and see if there's any really good reasoning for it. I am quite curious as to what the reasoning for this decrease is. But obviously advertising is my guess to bet. So looking at some of these finer details, Google Cloud obviously rose well. Overall revenues declined. Definitely scary. Near double-digit slide in search revenue was heavily mitigated by cloud revenues that jumped 43%, but double-digit slide in search revenues. That is incredible, and a lot. That's really advertising there, which seems crazy. And operating income dipped to $6.38 billion. Not great. Net income landed at $6.96 billion, which it's a beautiful profitability number. Oh yeah, beautiful. Google Search and Other was down 9.8%. YouTube ads were actually up 5.8%, which is good to see. Google Network Members Properties down 9.8%. Google Cloud up 43%, massive. And Google Other up 25.6%. So pretty nice. There's some good stuff here. Needless to say, I forgot to click on the press release. But don't worry. We're looking at that press. What did I click on? I did not click on Q1. You lied. You're lying to me. We're looking at Q2, baby. So, definitely one thing that needs to be noted. Revenues declining is pretty wild. When last year, during the quarter, they rose their revenues 19%. Now we see a decline of 2% year over year. Some people could find it as concerning, and I don't think that's why the stock's up. Profitability was certainly good, but compared to last year, which was $14.21, we posted only a $10.13 this quarter. Net income down quite a bit as well. And I do think there should be potentially some concern. And my concern obviously comes with valuation of the stock. Companies trading over $1 trillion, it is expensive. When you see... And again, you see me saying that Amazon I don't think is that expensive. Apple's not overly expensive. Facebook not overly expensive. But a company like Google, I get to the point where I think it's slightly expensive. Because a declining revenue, even on one quarter, is slightly a scary number. It's slightly a scary number for me when you're justifying that massive of a valuation in a absolute recession environment. So for me, it just screams that investors could target this stock and flock away. And I could be completely wrong. Investors are loving anything tech right now, as they have been really for years. I mean, it's been a few years now that tech has just been dominating the market. But I do think there's just personally some concern there if you're me. Definitely just not as beautiful as I'd like to see. So you did see a big increase in number of employees too. Do need to note that. So that's part of the reason. Expenditures on that. But Google advertising, which is a big part of it, down quite a bit. Google advertising down around $3 billion. Could, show to be a little bit of a concern for some people, no doubt about it. After that, let's see, we got some good stuff. Stock repurchases. We see from stock repurchases, the board of directors authorized up to $28 billion of additional repurchase, which seems a little, it's crazy that they're buying it at expensive points, in my opinion. I don't know, in my point, I don't necessarily buy the stock when it's near highs. I think it's better to buy the stock at the lows. That's my opinion on the matter. And again, I don't love buybacks that much. Just because buybacks, again, I don't know, it raised the stock price, right? But I do think the cash could be used elsewhere in this company right now, especially if they're not posting profitability. I just think the cash could be used elsewhere. So, looking at the balance sheet, which is important, I want to see a growing equity here, and if I see a declining equity, I get concerned for the company. Not as in they're gonna go, insolvent, but as in the valuation might not be justified. So let's take a look at it. I don't mean to be hating on you, Google. Total current assets on this company. They did it on the right side here. You love it. It did decline, 149 billion versus 152.5 billion of 6 months ago. Total assets in general did increase though, 278 billion versus 276 billion. You see right around a $2.5 billion increase in terms of total assets. So we take those. Now, liabilities, hey, I will say, this is what I would call a beautiful balance sheet still on this company, and they continue to increase it. That's right. Not a good quarter for them, but the balance sheet remains beautiful. 74 billion 6 months ago, decreased it to 71 billion. That's right. That's what you love to see. Even in a quarter in which they didn't really maintain, a beautiful revenue number, profitability was still very good. Now, it was a decline year over year, but profitability definitely helped them make this balance sheet just beautiful. So stockholder equity did rise to 207 billion versus 201 billion. I like to see it. Now, obviously, the question for this company comes in terms of valuation. I don't really like it at a $1 trillion market cap just because of a declining revenue. And it's not because I don't like the company. Now, don't get me wrong. It's because I don't know what investors will do when they see numbers like that. Some investors, really the big hedge funds, can be very finicky about that. You post one quarter that's a declining revenue on you're a growth beast, they might just jump out, and then the stock goes down massively, 10% one day. I don't think that's the case. I really don't. But I'm a defensive investor in this sake with how the market is right now, with how high the market is in the middle of a recession, and a pretty big recession at that. I'm more defensive in this point. So overall, that's what I got to say on it, Google. So I do apologize if I offended you though, but I hope you enjoyed.